Well, my base case is that there will be a deal in the near future because the Chinese certainly want a deal. They want to avoid a trade war. And I think that President Trump has already concluded that a deal is better for his reelection prospects than no deal. But let's also keep in mind that the tariffs might not give us in the United States as much leverage as we think. China is no longer an export-led economy. Last year, net exports, that's the value of a country's exports minus their imports, less than 1% of China's GDP, and the U.S. only took 19% of total Chinese exports. Chinese economy is a domestic demand-driven economy, just like ours. Last year, 3/4 of growth came from domestic consumption. So the impact of a trade war, not as big as some people here might think it would be.
But still bigger than it is on the U.S., is that fair to say, Andy?
Well, I think if we go to a full-blown trade war, the impact will be greater on the United States than on China. And the main reason for that is that the Chinese government has more resources, more tools, and more political will to put in place a stimulus program, both fiscal and monetary policy, which would mitigate most of the impact. And here, as you know, it's really hard to get something like that going. So it's going to be bad all the way around, pain on both sides, but probably more in the United States.
So Matthews, your firm has a specialty in Asia and expertise. How are you guys actually positioning yourself for all of this?
Well, we're looking at two things. First of all, as I said, my base case is that there will be a trade deal. But what we're looking at is that deal or no deal, there will still be a really strong domestic demand story, the world's best consumption story in China, retail sales growing at over 6% in real terms. So we're focused on finding Chinese companies selling goods and services to Chinese consumers. And then we're also scrubbing our portfolios to make sure that we're not going to be exposed to anybody who might get hit if things get even worse. For example, if the United States was to start restricting the export of American semiconductors or technology, IP, equipment, we want to be really focused on the Chinese domestic demand story. And it's also important to remember that China drives global growth right now. China, every year for the last 10 years on average, has accounted for 1/3 of global economic growth. That's a greater share of global growth than from the US, Europe, and Japan combined. Do we want to have a trade war with that driver of global economic growth?